Should you be investing in single-family homes or multifamily apartments? This is like the lifelong argument of which one's better. And really, there's pros and cons to both, but in this video, we're gonna stack them up against each other. And really, what everybody's gonna see is it comes down to personal preference. And you're gonna see my preference in that as well. I do lean towards one of these, and you'll see why. But that's not to say that my way is the only way. It really, we all pick the asset that fits our goals and kind of our personality and what we're comfortable with. And that's kind of one of the beauties about real estate. There's so many different ways to do it. But for this conversation, it's gonna be single family resident and multifamily resident, and we'll compare the two. But before we go into it, and once again, my big ask is for a like, for a subscribe. This really helps us get these videos out. And for us, we're really trying to educate, empower, grow, and the more people that are succeeding at finance, the more our mission is accomplished. So that just really helps us get this out there. Also, the comments, all the comments you guys are leaving, not only on where you're at, but ideas or videos you'd like to see in the future, really help. So we appreciate the comments that you're leaving. Thank you guys. I know it might get annoying me asking every time, but it really does help. So I'm gonna continue to ask. So starting with SFR, single family residence, one of the coolest things I think, or a pro, is the barrier to entry. You need less capital to get involved in buying a home. And also there's a belief system that comes into it that apartments feel like a bigger, more complex operation. And a lot of times, especially for new investors, we feel like we're not capable of doing all of that yet, but a home seems like there's less moving parts, and we feel like we're more capable of doing it. When it comes to investing, especially getting started, you need to get started. That's the most important thing. And so I like the idea that if you find more comfort in doing a home and it's gonna create the action, that is better to get started. And then you could worry about if it's something you want to do moving into apartment down the road. But starting is really important. So barrier to entry is a big one. For financing, you're dealing with, because it's residential financing and you're not in commercial financing, a lot of times you need to put less down. You can go as low as like 3% down, where in apartments, it's hard to find something where you can put less than 20% down. Remember though, when it comes to putting money down, just because a bank will allow you to do it, doesn't mean that's the best thing to do. More debt or more money you borrow, more risk you're taking on. So even though you can get away with putting 3% down, I wouldn't recommend that. But that does kind of prove the point of barrier to entry is easier moving into a home as opposed to an apartment building. So with SFR single family homes, there's more inventory. There's more transactions being made when it comes to SFR. I think last year it was like, I could be off, but it shouldn't be by that much. 5.4 million homes were sold in the US. If there's more transactions being made, there is the idea that you're able to look through more options and find more deals than maybe in multifamily when there's less. It's harder to find deals. So that's, I think, a pro. Another one is, with homes, there's a different psychological view of what a home is. And I don't know if it's having a driveway or a backyard or it just being a home. It feels more permanent. And because of that, you see on the SFR side, there's less turnover. Usually occupancy lasts for longer. So that's definitely a pro. Retention, I guess we'll call it on this. All right, so retention is higher. That's a pro. Okay, another one with SFR, exiting the property can be easier, or selling it. SFR can be easier to sell because you have a bigger pool of buyers, where With multifamily, you're pretty much just selling to an investor. But for a home, you can sell to a first-time buyer. You can sell to somebody moving up, someone scaling back. You can still sell to an investor or a rehabber. So you have a bigger option, which makes it easier to exit. And with investments, that's a pro. That's for sure a pro. Just to kind of go over, barrier to entry is lower, more options when buying, retention with tenants is higher, exiting the property is easier. So those are the pros that I see. Getting started is also a big one. If barrier to entry is low and you're going to get started, I think that's actually a huge win. So moving in, so these are, let's call these SFR pros. Moving into multifamily. And this is one of my favorite things about multifamily, and ultimately why I choose multifamily over single family. You're not going to buy one investment property and become financially free off it. You're going to need to get a lot of them if you're investing in the single family space. And so when I started looking at it, I wasn't being efficient with my time. If I had to worry about maybe getting 30 or 40 homes to get to a point where I could be financially free, it seemed like there was so much due diligence to do on every home, getting finance for every home, costs for every home, and even having to go about and purchase that many single family homes. It just seemed crazy. But I liked the idea from an efficiency standpoint that I could find one building that maybe had 50 units and do the due diligence on one building, negotiate with one owner, get it under contract, get financing and close, and one building with 50 units now could be equivalent to, I don't know if it's totally equivalent to 50 homes, let's call it 40 though. That seemed like such a better way to scale. And knowing that you have to get to a point to achieve financial freedom, it's not gonna be one deal, that seemed like a much better process to get there. So I'm gonna call it, let's call it scaling. I love that side of multifamily. Next one, and this is, you hear this quote a lot, I actually love it. With single family, you're either 100% occupied or 100% vacant. So that means if somebody leaves, if a tenant leaves your building, guess who's paying the mortgage? You're paying the mortgage now. 100% vacancy is, you don't want that. In single family, you have that risk. Now, the argument to it, and it is good to bring up, you can get to a point where if you own multiple homes, like let's call it 20, for example, well, you look at the 20 homes as your total portfolio, and so if 2 homes were vacant, well, on the total portfolio, your other 18 homes are covering all the rent. So you might not go negative. That is true. But that just strengthens the first point in my mind, that if it is a numbers game and you have to get to multiple doors, I like the idea of the efficiency on time when buying apartments. So that's a big one for me. But I love the quote, 100% occupied or 100% vacant. It is a pretty good one. Another thing I really like is economies of scale, which really means that your cost per unit is lower. And this is why. Because with an apartment building, you have one yard, or you're managing the landscape of one building. You have one roof that's overseeing multiple units. If you fix a pool, the pool is now adding value to all of these units. That in turn brings the cost per unit down in comparison to having all of these individual units where all of those costs are held on one home as opposed to spread out over units. On self-management, before you get to third-party management, I think it's so much easier managing, like I said, one yard, one of the landscapes, one pool with multiple doors, as opposed to having homes spread out throughout town where you're driving all over the place to manage each home. You will get to a point where you have third-party management, which I would recommend. But even then, if you have to get to a point of owning a certain amount of homes for the numbers to make sense to hire third-party management, then we're back to the first point. How do you get there quicker? And I think buying multiple doors all at once is the way to do it. This one is kind of one that we had as a pro on SFR. I'm actually now going to use it as a somewhat of a con. That might be hypocritical. But we talked about there's more on the market, there's more inventory or transactions being sold on SFR. So that is true, but because there's more things being sold and because there's this idea that a lot of times people don't think that they can move into multifamily. They think the transition's tougher, it's more complex. So they have a belief that it's easier to get into homes. And because of all these TV shows of fix and flip and all the renovators, it seemed to have made single family very competitive. So even though there's more transactions happening, if it's competitive, that is increasing demand, which is increasing price. So I guess now that I think about it, I might have said you could find a good deal. It's actually kind of hard to find a good deal. With multifamily though, because people are intimidated and feel like they're not capable of moving in, that does bring competition down. There's less buyers, which in my perspective makes it easier to negotiate prices down. So I would say, based on the perspective that you're looking at this, you could use a pro on either one, because now that you're listening to my pros, I think you're starting to see that my bias might lean more towards multifamily. I look at that as a pro towards multifamily. So the first point, the scalability, is equally, I like them the same as far as this one that I'm about to tell you. The way multifamily is valued is, I don't know if I like that better than the scaling or if it's tied, but these are the two strongest points in my mind. The way multifamily is valued is different than single family. Single family is valued based on comps. So if you have a home that's a 3-bed, 2-bath, they are gonna look for other 3-bed, 2-bath in your neighborhood, look for what they sold for, and that's how they're gonna get your valuation. It's based on what the comparable sales are. In multifamily, it's different. And I like it because it gives you control to get to a particular valuation. Value is based on your net operating income. So with an apartment building, it works more like a small business. You have your gross income that comes in, you have your expenses that come out, and then you're left with your net operating income. If you can increase your net operating income, you are in turn increasing the value of your property. So if you can do things to raise rents, if you can do things to bring down expenses, those are all adding to your net operating income, which is adding to your value. So your ability to force appreciation is much greater than what you have in the single family side. So I like that. I feel like it gives us control to implement a strategy and hit returns that aren't based on what the person next to me did. One of the coolest things is in apartments, you can have 2 apartments right next to each other. Same amount of units, same square footage, and have 2 completely different valuations based on who's running their apartment more efficient. So I really like that side. Control, and then the earlier one, scalability. Those are by far the 2 biggest selling points for me. You have to pick the one that best fits you. It really is. Like I talked about starting, that is the most important thing. And one quote, I don't know who said it, but one quote that I love is, you never get rich off your first deal, but you always get rich because of your first deal. So starting is really important. Now that I think of it, I think one component I didn't address is when you listen to the 2, and this could be because how I delivered it, and maybe I'm showing my bias, but if you're listening to multifamily and going, I like everything about multifamily, I get everything you're saying, but dude, I've got to raise more money. How do I raise money? It's going to be harder for me to get into multifamily, where a home, I could save for a home. And that is a valid point. the first thing I always think of is, yeah, but you could use other people's money and raise money. But I get that can be intimidating, and still a lot of people don't think that they're capable of doing that. If you feel like raising capital for a 70-unit building for your first thing is not possible, I think it is, but if you feel that way, I would recommend looking at a 4-unit if you like apartments better than single family, and then use that to then get you to the position of getting into maybe an 8 and then a 15 and then a 20, etc. But there are people that don't like multifamily, that just like single family and make a lot of money doing it. It really isn't one or the other. It's finding what fits your goals best. But hopefully this gave you an idea of the difference between the two. Hopefully I didn't jade you and steer you in one way, because I do like multifamily, but they are two great options. So hopefully this helps. Leave it in the comments. Let me know what you think. If you think I missed things, because there might be things that I forgot about, put them in the comments. And let me know what you guys think. If you're leaning towards SFR multifamily. And let me know if you guys want me to make follow-up videos on house hacking with a 4-unit and how you value a multifamily apartment. But I will see you guys in the next video. Thank you, everybody, and hope that helps.